Hey, what's going on, guys? Hope you guys are doing well today, and let's get to this video. So today is September 14th. I traded, finishing up for the day around 11 a.m. here, up about 20 points. So let's do some reviews on a couple of trades. I actually wanted to go over some trades from the session on September 11th. There were some examples of trades that you enter into a trade and you kind of need to give it some breathing room, in the sense that if you put in your break-even stop too quickly, because of the nature of the market condition, you're likely going to get stopped out for break even, and you don't want that in the case of a winning trade. So I'll show you a few examples of trades. I'm going to go through some trades from September 11th and from today, September 14th, and I'm going to show you examples where the market comes back to retest, and sometimes I got stopped out break even, and today some similar things happen and I managed to stay in the trade and get out with a limit order profitable. So let's get to this. So here's an example of a long trade right here. So the market is kind of consolidating down near these 125s, and we've attempted multiple times to break this low by 1 or 2 ticks. Now here on the left side, you can see that there's a lot of orders that have been trading into this. So there's a lot of absorption. Basically, there's like a silent buyer that's been sitting here, kind of absorbing the selling that's going into there. And every time it tries to make a lower low, it kind of just bounces right away. And that's what you call an accumulation phase. When the market's in an accumulation phase, you generally want to stay away from trading in the middle of it. Look for opportunity when the price breaks drastically out of it and then comes back in potentially and traps out traders who thought it was going for a breakout. Anyhow, in this case, you're going to see me get long here. I was watching this action for pretty much as long as it was occurring, and I was looking to get long. The level here for me was a level that I was looking to get long, and you're going to see once we trade down another time, I think it ends up trying to trade these 23s again. And let's just watch this. So we have sellers coming in, a bit of absorption at 25, and there's been a lot of sell absorption here in general, and not a lot of supply coming into the market to push this under this, say, 25 zone, right? So now we're pushing back up, we're trading in the high 30s again. And one thing to note is that these buy orders combined with the offers lifting, this price just moved from the low 20s all the way to the high 30s. So that's something notable. We need to always be paying attention to how price is moving based on the orders that are showing up on the tape. Because, okay, so you see right here, that's where I got long. I got filled at 36.50, and the market is rallying. I kind of liked what I was seeing. So we're trading back up into these 40s, and we're continuing to see some demand. And again, keep in mind, this didn't just happen in one shot. In order for this move to occur, there was a lot of consolidation that occurred prior to that. That's me being up about 25 handles at this point, and I'm not trailing the stop. So what I do is I put in a break-even stop at this point, okay? Now look at how we traded above 60, and now the market is kind of going sideways. Now watch what happens here. Now we're trading back to 50. The price went down on not a lot of sell orders, meaning that there's a lack of notable support. So what you're going to see happen here, you can see the market sort of consolidating sideways. It looks like it wants to kind of come and retest these prices, right? So you see I have a break-even stop, and then boom, stopped out break-even for that trade, that awesome entry in the 30s. And what I did was, as soon as I saw that seller come in, I brought the stop up and I got out of the trade immediately because it looked like it was going to come down and retest that price. So let's continue watching here, and you can see that it came down to retest the 40, and now we're rebidding 50s. And then I stopped out of a fantastic entry because the price came down to retest. So that's an example of a trade where you end up nailing a move in a key price zone, and then before the market makes any drastic move away from it, it's likely going to come back and retest some portion of this range here. And that's exactly what it did before it finally continued to rally in this direction here. So that's an example of putting in a stop too early and not expecting one of those retraces. And again, it's going to differ from setup to setup. Let's say you end up with a good entry. A lot of times that entry might get tested once or twice. So you kind of have to look out for these things. You have to know if your system permits you to do things like that. And that's why if you're trading more than one contract, generally you're going to have the opportunity to take off a portion of it when you have drastic moves in your favor, and then keep a stop in a place that is not likely to get hit. Again, stop placement is one of the most important aspects of trading, so we need to focus on that. So that's an example of where I stop out of the long trade, and then the market continued to trend higher a little bit. All right, so let's go find some other examples of this. Here's an example of a long trade I was looking for because the market was attracting a lot of shorts at this point, and based on how drastic these moves were, basically there was no more supply coming into the market at these points, and it was a decent area to get long. So I was watching the order flow and I got long right at this point right here, and you see me get filled at 74.75. Market's starting to see some demand at these prices. Shorts look like they might be under pressure, and you can see me at this point, I'm not exactly in a rush to get out of this trade with a break even. So watch this, market's rallying above 80. And there I go, I put in the stop. And honestly, I would argue that that's too early to put in the stop, right? And I'm likely gonna get stopped right here. But then I say, look, I'm bringing it lower. I realized in that moment that I put in the stop too close. If this was going to be the move that I was expecting based on this order flow, I needed to keep a stop either down here where it was originally or pretty much my break even. So I put it close to my break even, and then the market looks like it continues to rally here. Trading up to 90s, 93s. That's an example of a great long trade. Then I start trailing the stop. You see, when I start seeing that stuff, then I start to trail the stop. And a good thing would be to just get out at that point. I'm seeing sellers on the tape. Just get out. Get filled at 95. And that was the end of the story. Now, it did trade higher, I believe. There's different types of setups that I trade, really. That one was an example of momentum scalping, where you kind of get in with the flow of the market as it's showing you a likely move is about to happen. And I'm going to show you another long trade right here that happened right after. I got filled at 98. And the market's rallying to 200, and you can see me there putting in a stop relatively quickly. You see how quickly I'm trailing that stop there? Because I know that at any moment, this breakout is what it's doing is it's squeezing out shorts. But I know at any moment, if there's no demand up here, we could see a breakout with no demand, and then sooner or later I'm offside and I get stopped out for 10-point loss. So in this case, I'm more aggressive with trailing my stops. So you can see I trail it up to 204.75 and I get stopped out at 204. So when you get the feel for how the markets are trading, you have to be a bit discretionary with how aggressive you're trailing your stops. Now, when it comes to managing your risk in trading, that's always going to be mechanical. But the one thing that I would say you could allow a little bit of discretion on is how quickly you put in a break-even stop, and it's going to vary for setup to setup. So in some cases where you're just momentum scalping, it's good to trail that stop right away. And then in other cases where you're looking to nail a certain move and you know that the market is likely to retest, in that case, you're probably going to be less aggressive with trailing your stop because you know the market's likely going to shake out some weak holders before it makes the move that you're expecting. Okay, so here's an example of the short from today. So this was September 14th. The market was trending higher. There was this sort of pattern going on where we're holding the exponential moving average and we're seeing these pretty aggressive pullbacks, but every time it reaches the moving average, there's no more supply and then the thing just rallies back up. And what that does is it traps shorts into positions, it traps weak longs out of positions, and not enough supply at the moving average, and then it just goes back up. That was sort of the pattern we were seeing. So this 350 was on watch for me for resistance. We popped up to there. Okay, so let's just watch this move together. So the market broke out of the accumulation zone and we're trading up to this resistance zone of 350. So one thing you need to know is that weakness in the market will usually appear on up bars and strength in the market will usually appear on down bars. Okay, so watch how the market lifts from this 340 here. So we're lifting up here 42, 43. And shorts are unwinding. Longs are getting in because they think this is the maximum breakout. The offers are getting lifted. They lift all the way up to 49.5. And let's look at how we trade here. And it doesn't want to trade there. So it traded there very, very briefly. And then it traded lower. So that doesn't mean that we're going to trade lower from here. Okay. But the reason I was interested in the short at this point was because of the level. This price had some significance and I watched how it traded up there once and I saw there wasn't much demand. So I said, okay, are we going to see another attempt there or is it just going to stop right here? Because sometimes the market does that. It just hits a price, comes back, doesn't retest, and then forget about it. It trades the opposite direction. And this happens quite frequently. A lot of people are going to sit there waiting for the double test of the price they're looking for, but sometimes you don't get it. So you kind of just have to be aggressive in some cases. This price was attractive for me for a short, and that's why when I saw the fact that there wasn't really much demand here, I said, all right, let's get it. That's it. Fill that 45, stop above there. And then here we go. I see some sellers start to come in, and you can clearly see that since we're on side on the trade, there's no reason to cut it. I'm not in a rush to put in a break-even stop either because I'm liking what I'm seeing in the short term here. I'm seeing these sellers kind of come in slowly. They're creeping their way into the market. And again, we're pulling back to the moving average. This is the point where there was previous demand all of these other times for the last, say, hour of trading. And now we're watching it again. Is there going to be demand at the moving average? Is this time going to be different? And it turned out that this time was different. We saw some sellers continue to be aggressive here. Once I saw the large move down to about 20, that's when I decided to cut it. The market did pull back a little bit more, but I'll take it, okay? Another trade right after here was this sort of idea, and I was looking for a sort of a retest. So we had this once, twice, and then retest back into the range, and this 335, that was the low volume area, okay? I was interested in getting short from this price. There's a bit of a gameplay that goes on here where it looks like it's holding. They bounced it a couple times. My stop was at 38.25 and it traded as high as probably 37 something. So once I saw that reject, I was a lot more confident to stay in this, and I was looking for about 320 to 315, and I didn't put in the break even at this point because of what this rejection just told me. It told me that there's no buyers to keep this above 335, and we're likely going to come down and test a little bit of this liquidity here before continuing in any direction. So that's kind of what happens. We see the bids getting pulled there. I put in a limit buy, and we see this sort of move. I put in my limit buy at 17.75, and then we see boom, right back up to 26. Now, this is where it gets tricky, because when you're short and you see that, you're probably going to get out because, yeah, it came back to your break even. But at the same time, where are you coming back to? You're coming back to the previous zone that it was holding as support. Is it going to rally back up at that point? This is an example of a trade where you need to give it some breathing room. So I'm happy I managed to do that here. I did not cut it, and I had to stop there just in case something drastic was going to happen if I saw a massive buyer. And you see it just fades right back down here. We're fading back down to the low 20s. And this is not strength, right? So we saw this massive bull bar, and now we're trading back into the low 20s. This is not a sign of strength. We trade lower, and then my buy limit gets taken out, and I'm out of the short trade. So market's pretty weak. I even moved it down a tick, and boom, it got filled. So that one was a little tricky, right? Because you got that retest, and then you get the real move. And that's why sometimes you have to be a little bit more lenient with when you put in those break-even stops. All right, guys, so let's have some conversations in the comment section about when to be aggressive putting in break-even stops, when not to be aggressive putting in break-even stops. All right, guys, I'd love to hear your comments. Take care. I'll see you in the next video. Ciao.